So when we start these meetings, we go into obviously anything that's relevant. When you're watching these meetings in the future and recording, obviously some of these things aren't as relevant. No better word for it. Dudley came in at 7:30 this morning. There was an opportunity, got a little bearish, then stayed a little bearish after the open. They've taken back some of that weakness, but overall, that comment was a little bit of a game changer. I don't think this market or these markets thought the Fed was as hawkish as that comment, where they could raise rates at the September meeting, plus the fact that Dudley's a dove, not Dudley. Yeah, it was Dudley. He's a dove to boot. He's an FOMC voter. He's been dovish, and yet he's had some hawkish comment. Those were hawkish comments at around 7:30 Central this morning. So that's kind of what's in the market today as we move through the mid part of August. And it's been slow. You've had to been able to cut your frequency down. Whether you increase or decrease your size, you had to cut your frequency down. There isn't that many opportunities during the course of the session. So you've got to find things to preoccupy your mind, whether that's reviewing some stuff with other traders, whether that's doing things that don't create boredom, which creates you pressing or forcing trades that otherwise you wouldn't take. Today's a perfect example. There were two trades that I missed. I was offering, and it comes up trades like 95 at my offer, no fill, breaks 2.5 points. Comes back up, trade 67 at my price, no fill, breaks 2 points. Those were the first two rotations lower this morning. You have to get good at tricking your mind, because if you don't, then you're going to force something because you're mad because you just missed two what would have been effortless winners. It's a skill set, but I had a guy in the room asking me, how do you do that? And there's really no manual to teach you how to trick your mind. You just got to understand the concept exists, and you're trying to recreate the feeling of, if I did catch it, how would I feel? You know how you feel when you're about to go on vacation? You're kind of excited and everything else. Well, trick your mind, pretend like you're going on vacation, and just create that feeling, and then you, for at least that time period, successfully tricked it. It's not the end all, but it does help. Pressing, when you miss two effortless winners, your mind wants to press and get that feeling to be real, as if you didn't miss it. So for today's topic, we're going to go over time frame overlaps, and we'll get some input from Woj, who has contributed to this meeting in the past. He hasn't been here in several months, but he's come back to contribute what he can. Things are slow. So I'm looking at time frame overlaps, and I'll reiterate this maybe a million times throughout me talking about it. Understanding this isn't going to make you $1 million, this particular topic. What you're going to have to understand is it'll a lot of times keep you on the right side of the market or keep you from the wrong side, especially if you're a longer time frame type guy and trader. So let's go to the charts. You guys could see three charts. The two up top are 60 minutes and dailies. So if you just think about the market being the ground, you're on a helicopter, you're in a plane. That's kind of what different time frames are. If you're on the ground, the 6 PNF, the 4 PNF rotational charts are more relevant because what? That's what's going on right now, right? You're on the ground trying to execute. If you kind of get on the drone, as Dave calls it, maybe you're in a 15-minute or 16-minute chart. You're in a helicopter, maybe you're a daily. You're in an airplane, you're looking at a weekly. I'm not going to show you a weekly because a weekly shows straight up and the bulls are in charge. You should have somewhere on your desk or maybe track what the different time frames are showing you. For instance, weeklies are bullish, right? You look at a weekly chart, a fifth grader could tell you it looks like it's bullish. You look at a daily chart right now, and let's blow this one up. A fifth grader could tell you it's bullish. This market's going up. In here, bears took control, albeit for only a couple days, but at this point, we don't know it's going to head back up till it heads back up, and then wham, the bulls take back over. That was your transitional day. Not that you were able to catch any upside, but after this day was over, you know that the bulls have the control back on a daily time frame. Now, I talked briefly about this in the trading room, I think, yesterday. But what I didn't talk about is when the torch gets passed. So we know, and a fifth grader could say the bulls have it. Even though this day today made a lower low from yesterday, to me that's not enough to say, all right, the bulls are dead, the bears have it. What you need to do is get good at the whole lines in the sand, being able to frame consolidation. And what I mean by that is, in here, your eyes have to draw you to this cluster, right? That has to be pretty apparent that that was a fight. What we like to do is you take the middle of it. And on this day right here, where my arrow is pointing to, was a day that you could say, as soon as we moved through the middle, that the bears took the torch, the baton from the bulls on a 60-minute time frame. Does that make you money? Maybe in this day it makes you money. Maybe on the next day it does. And then when it gets back to the middle, you're like, now be careful. They get back through the middle, the bulls take back over. Now we don't know any of that at that particular moment in time. But you do, as we cross the middle of this consolidation, be careful on a 60 or on a daily. I'm talking 60. These are the daily chart. On a daily chart, which is a pretty high time frame, the bulls have maybe temporarily given the baton to the bears, but they've given it to the bears. So you're looking at where the fights have taken place and where they might be getting, where the one side's getting beat on this particular time frame. So each chart represents a time frame. This is a daily time frame. And you have to have a good sense of, like, these brown lines were previous lines in the sand. We had one way down in here where after Brexit we came down and bounced off it really nice 2 days in a row and rallied off of it. Obvious, we moved lower because of a geopolitical event, right? There were some good, strong fundamentals that shifted us lower. But guess what? On this daily chart, let's go to a yellow pen. On this daily chart, this would have been your consolidation high, and this would have been your consolidation low. In the middle of it, where I put this brown line, 68 quarter, would have been where the bulls took back over. Not here, but in here. When they were trading up in here, you knew that the bulls had the leash on this time frame because they were through the middle of the previous consolidation. Now, I'm not saying that they're going to pop through here and everything else. They came back to where they started. If you guys remember, we were trading at Brexit, and they were trading 2100 to like 2110 around when there was a couple big moves lower. It started around there. So we used that as resistance for a while until I think this day was the July unemployment report that was real bullish, sent us up, kept us up for a month. Back to my point, where in here you could say that the bulls probably have the leash until they were to take out this brown line. That's why it's in there. And this was just a confirmation. That's the right side. Does that mean you're not going to take shorts inside a day? Of course not. You're going to take shorts. But the longer your time frame, the more emphasis and more reflection you have to do on higher time frame type charts. The longer your hold time is. And that's how you should distinguish what time frame you are. How long do you hold on to trades? If you're holding on to trades a lot and they're losers, you're not a high time frame trader. You're a loser because you're holding on to trades a long time because they're not working. So it's not about, well, I hold on to trades a long time, but they don't work. Well, you're just, that's not a strategy. You're just holding on to stuff because you can't admit that you're wrong. So that has no bearing on what time frame you are. There have to be some winners in there and show some consistency to be a swing trader. A lot of times people who talk about, that I've talked to in the past, they like to hold on to trades to several days. It's because their locations suck and they need several days just to get out from being underwater and have it work in their direction. So they're high time frame traders because their locations stink and they need that much time for the trade to breathe. It has nothing to do with they want to be long time frame traders. They're just stuck. So anyhow, this particular chart's a daily, and even in here, this was a day or two that the bears temporarily took over on a daily. You don't have to go down here and look at this stuff. The recent consolidation was right in here. This particular day, I can't remember what happened. There's something happened, I can't remember offhand, that shot us lower. And it took 2 days, and as soon as we got back through the middle of this consolidation, this day, which I believe was Unemployment Friday, a week and a half ago, bulls took back over. So on a daily, if we were right in here, and today was this day here, we'd say, hey, on the daily time frame, bears have taken over. And then right there, we would have said, when it, not at the end of this day necessarily, but as it traveled through the middle, hey, be careful, the bulls are taking the baton here. All right, so then it gets you and keeps you on the right side. Now, if I look at this, I start looking at, I still think that this would be important, the middle of this, wherever the middle of that is. But now we're starting to get some nice consolidation here between, let me draw it again, between there and there. And we just, not coincidentally, kind of came down to the middle of it today and rallied off of it. But that's a pretty big line in the sand for higher time frame guys. We slip below there and then close below there on a daily. Bears got the baton. All right, so that's a 60-minute. Same concept on a, that was a daily. Same concept on a 60-minute, though. Same patterns you're looking for. Before, like last week, I think even through tomorrow, on my whiteboard, it's who's in charge. So you could put up a who's in charge board or whatever and just briefly look at this stuff. Well, last week, Friday and Monday, the bulls were in charge on the weekly, on the daily, on the hourly, on the 4 and 6 P&Fs. It was bulls, 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 bulls. Well, then that changed. Yesterday. That changed when they started to take out the middle of this box. You got to visualize, well, where's the last consolidation? I draw the highs there and the lows there. And they started, these are 60-minute candlesticks. They started taking them out in there. So on a 60, the bears have some hope. Dudley's comments and some weakness that came in this morning helped drive us a little further south than we otherwise might have went. But before all this, that just skips ahead. Before all this happens, the 60s were dead highs on their they were also categorized as bullish. Bulls had the baton. Bears have it. And I would say that the bears have it until you start to identify 60-minute consolidation in here between these two. I would think that when you start getting above the middle of there, bulls start taking the leash. Now, you got to use a lot of the other skills and technique that are taught throughout this program to execute trades. But your bias could be a little better and less random when you start paring down on time frames and overlapping them. So you have a better chance at short trades on a day like today than yesterday. And we knew that coming in. This isn't a 20/20 hindsight type of thought. We knew that coming in. And a lot had to do with some pressure on a 60-minute time frame. So then you look at the more recent, either a 4 or a 6. This is a 6 P&F, which drills down pretty tight into the now, right? And you just got to say, well, what recent consolidation would you say is important to bust through? And I would take a helicopter view back and say, wow, this looks pretty interesting in there. In the middle of that held a couple times. And man, it seems like if they can get through these swing lows, they're gone, and they really have the leash, the bears. But you can't go back too far because the higher time frames do that, in my opinion. So first off, I would look at being below the middle of this consolidation would keep the bears in control on this chart. You don't want to go too far back and start looking at consolidations from 1979 in order to determine what the hell is going to happen today. So just remember that when you're looking at time frames. Don't go, I mean, you're going to see consolidations on a 6P&F, but you've already covered that probably on the 60-minute time frame or the daily, whatever. You want to look at near-term stuff. And now you could start breaking down the thought, and the question becomes, well, if you're long, you have to understand that they're a lot more nervous today than they were yesterday, and not just because price is lower, but because some time frames are starting to flip. And that's what's important. Time frames are starting to flip. And then maybe you're a little bit more aggressive on the short side, less aggressive on the long side as a day trader. Maybe you're picking better spots and just playing it from the short side or long side. Maybe you're holding on to longs a lot less, right? Shorter leash on longs. Like yesterday, if you were going to get short, fine, but you better have a short leash on them and better have known that throughout most of that session, or else you would have just got grinded out all the way through the highs. That was this stuff in here. And then it was just garbage in there. There's really nothing to trade. Big breakout, guarantee it went to a thin spot, stopped. That was the resistance in the overnight high, I think, in today's session. Dudley cracked us lower. And I still think that these lows are in trouble, and there's some weakness below because there's too many of them starting to pile up as we go back to last week. I hope that makes sense as you start to say, hey, who's in charge, and have some reference. So when someone says who's in charge on a daily, still the bulls. On a 60, bears. 6P&F, bears. Bulls on a weekly and a daily, the bears have kind of flashed up for a little hope on a 60. When you start getting the dailies to cross over some consolidation, then you're really, I think, a little bit more encouraged to play it from that side. You got to line it back up and help you jump on a helicopter, jump on an airplane, back to helicopter, get on the ground, strip a little bit more randomness out. Lockhart's talking. We knew he was going to start talking during our meeting here. He's a moderate. He's not a voter. Would not rule out at least one rate hike this year. So it's pretty much backing up what Dudley had said earlier this morning, and it seems like the Fed's signaling that the September meeting is live for a hike, and they're trying to price in one, so it's not a surprise when they do it. His comments again would not rule out at least one rate hike this year. He's in Knoxville, Tennessee. Well, let me open up your mic, see if you got anything to add. You there?
Yeah, I'm here.
What would you add to any of this?
Yeah, the way I look at time as far as trades go is I separate the night session and the day session dramatically. And just because I strip out time when I'm trading outrights versus spreading, it helps me stay patient and wait for this. I'll sit in the pocket all day long and wait for a setup. And if I don't, if I get bored and I'm sitting on my, in front of my monitors and I'm just not seeing anything, if I'm not getting the green light to pull the trigger, I'm just not going to trade it. I mean, for example, in the S&Ps, we've been in a sideways choppy trend since the 5th of August. You don't get too many opportunities to make a lot of money in there just because you're not getting them. There's no breakouts. I trade from the night session on spreads, and just because they don't blow out as much as they do during the day. So it's pretty simple for me. It's identified a long time ago what I'm supposed to do, and I just stick with the game plan that it's kind of been working for the last couple of years.
What could you show us your screens? I don't know if you're in your office or if you can or if you can't.
I'm at home, and the only screens I'm on my trading monitor. So
okay. Yeah,
there's nothing that you can see as far as good opportunities as far as what I look at.
But when you separate the day session from the night session, what are you looking for? You're looking for where could there be support resistance off of what happened overnight?
Well, no. The problem I have trading during the day is that spreads can blow out a lot more, okay? So they can get a lot looser than they do overnight, and there's a lot of reasons behind that. But what I'm trying to do is capture, in a spread market, what I'm trying to do is capture any type of spread that I like that doesn't blow out a lot. So what separates that from the night and the day? It's just volatility. And during the day, when I'm entering into the day session, if I have a position on, I'm looking to get out of it. I don't want to carry any position from a European session into the U.S. session. It's just, it's one of my rules, and it can turn. It's a 50-50 shot at being a winner at that point. There's no the opportunity shrinks dramatically going into the 7 o'clock, 7:30 open for treasuries. So then what I do is I back off on being aggressive on my spreads. So I trade in. You can trade in absolute value in a spread, or you can trade in net change. It doesn't matter. It looks the same on a chart. I widen my spread levels during the day. So if I was willing to do something at a tick and a half, 2 ticks cheap or strong, I'm now 3 ticks cheap or strong on the day session. And then as we're winding it into the end of the day session for the U.S. Treasury market, I can be more aggressive because I know I'll have all night to get out of those positions. Now, outright trading doesn't change at all what time of day I trade. I'm going to use conditions that I created for myself that I need to see to put an outright position on. Doesn't matter if it's midnight, 4 a.m., 2 minutes before a number. The stars have to kind of line up. And when you're in a choppy trade like this with the S&Ps, when I put a position on, I'm not looking to take a lot out of it. We're in a 5 to 7 handle range every day.
Yeah,
so,
like where is it going to go before it's going to test you about 50 times before it ever would go? It's not. If you get money into it and you don't take it, it's going to test you. It's not going to just keep going.
It's a summer market, and the S&Ps are in a range since the 5th, guys. I mean, what do you expect to take out of this market? Take the money and run. There's nothing wrong with booking profits. And if you got a loser on and you don't know you have a loser on and it's going against you, you're kind of questioning, should I keep it? Should I get rid of it? I mean, there's the losing part of that trade is not getting out or not understanding when you're supposed to get out.
Right. Not when to get out. Too late. You should have had that plan before you opened the position.
Right. I'm sure everybody's heard the game plan of trading is where am I going to get in? Where am I going to get out if it's a winner? Where am I going to get out if it's a loser? It doesn't matter if you're a 10-minute a day scalper or 3-day trader. You need to know, if I get into this position, where am I getting out, no matter where the market goes. If it's a winner, if it's a loser, you already need to know what's going to cause you to get out of that position. And if you don't, you're kind of trading blind. You're kind of going into the trade without a game plan.
No doubt. Yeah.
And I do that on every single outright position I make. Because my outright position setups take a lot longer than they used to. Trust me, I used to trade about 20, 30 times a day. I was one of the most aggressive traders out there. I would turn on every flip in the 10-year market off of something. And because market conditions have changed, I had to change. And that caused me to slow down, reevaluate, like, what is a good trade, what's a good position, and I can actually focus on, like, if I get these, I'll give you an example. If I buy these 2179s in the S&Ps, where am I getting out? Maybe it's going to take me 15 minutes to buy those, because I'm not going to buy the quarters, and I'm not going to buy the 9.5s. I'm not going to buy 9 in the orders. My price is 79. If I don't get them, I don't get them. If I get them, I know where I'm going to get out for a winner or a loser. And that slows me down. It makes me put a game plan together. And that's where time is kind of stripped out for me when I trade outrights. I don't care how long it takes me to get that trade on. It might be 3 hours before I buy those 79s. And then it might be 3 more hours after that, because we're in such a slow market, before I either puke it or I take profits.
It has a lot to do with what the hell the trade is.
Yeah, 5 minutes to take a profit. That'd be awesome. But I can't tell you where the market's going to be in 5 minutes, if that's going to be a winner or not.
It's a probability
game.
And certainty is something everybody seeks when they get into this game and this business, because it's human nature to sit you're comfortable with certainty, but it's anything but, and we keep going around. The first education I got about actually how to trade, and I don't know, did you take any pit trading classes at the CME?
No.
Okay.
I was never at the CME.
You never even went there for the class. You didn't have to be there to take the class, but
I was
okay.
that.
You would have known. We didn't let you in the building. Made me think of the story when I was trading in the Dow. The guys who come from the CME and the guys from the Board of Trade guys didn't like CME guys, and sometimes I wouldn't trade with them. Anyhow, it
happens to me on the screen. It's weird. I don't understand how they know that.
It happened to me this morning. I didn't get 90 trade at 60. I knew I wouldn't get fill of only 90 trade, but sitting there like a goof there at what price was it? Like 82 quarter and 81 even. Those were 2 prices. But anyhow, so the classes that I took were pit trading classes. This is back in the like 97, 98, when electronic trading was kind of whispered, but still the floor dominated. But the first thing he would say in every phase, there was 3 phases of the course: the beginner, an intermediate, and advanced. You got to know where you're getting out before you get in, is what he said. Where are you going to get out before you get in, especially for a loser? So the exercise that we did, and the class was, the traders were the students, the brokers were the instructors, in an actual pit. It was a currency pits after hours. And the main exercise, Woj, was scratch. He said, you might not be a scratch type trader, fine, but the exercise is knowing where you're going to get out before you get in. So the exercise would be, if you buy it at 72 even, look for someone bidding to sell it at 72 even. And understand that when you're long, you're looking for people who are bidding to get the hell out with a market order, essentially. So you think that that's easy, and it is easy for you and I now, but it isn't when you're learning. And I was a clerk, so it was easier for me because I knew bids, offers, and everything else. So I was the most aggressive guy in the paper trading is what we were doing, right? We were paper trading. The brokers were the instructors. And the brokers knew when to rally the market. They knew when to kind of get all the students stuck short, and then they would take it up. And the next part of the exercise was get out. Look for, if you're short and the market's rallying, you got to get out. What are you looking for? An offer. There ain't many offers when a market's rallying. That's why it's rallying. But anyhow, those mechanics are still important in the electronic environment because that's the raw nature of why markets move. Too many bids, not enough offers, we go up. If you're stuck short with a lot of other people, good luck getting out. You better have a plan beforehand. But my point is that was a raw exercise done when everything was in a pit, and yet when people try to trade electronically, there's no exercises or drills that are laid out there. We have them. So people understand how to master your dome and how to scratch and just do those things. Those are mechanics I think everybody should know, whether you're going to be a position trader or a scalper or somewhere in the middle. You got to understand the auction theory. You got to understand flow. But if you can't quote a market, I've always said, if you can't quote a market, you can't follow it. If you can't follow it, how are you going to trade it? And I don't think, maybe you wouldn't be surprised now, Woj, but when you quote a market, like if I said to Woj right now, Woj, where are the S&Ps? What would you say, Woj? He's gone. You there? Oh, I muted him. Hold on, you're muted. Woj, you there?
Yeah.
I muted you on accident.
I almost started screaming that, like, fast market.
Well, where is it? Where's it at?
9 in the orders bid, though.
Yeah, so, and board of trade guys say 9 in the orders, that's 3/4. But anyhow, and evens he said the bid first, right? And we know that because you grew up you say the bid first, the offer second. And you might not think that that's important, but that's really important. You got to get in the flow and understand. It just went 80 even bid, 80 quarter bid. So it's quarter bid at a half, quarter bid at a, so that's a quoting exercise. And if you think that's just an exercise for people who want to trade really fast in and out, kidding yourself. You got to follow it. Because how the hell are you going to follow like the movement of something that you might see in the corner of your eye that's going to affect what you're going to do? And knowing where you're going to get out before you get in creates less surprise. When there's less surprise, there's more objectivity. The example I use, you walk down the street and a guy jumps out at you, you're going to react differently than if you knew there could be a guy that jumps out at you. You know, you're going to act and react differently when you kind of have an expectation for someone to jump out at you. You're going to be a little bit better prepared. Why? Because you're less surprised. Not very many people are good when they're surprised, unless you're highly trained, right, to be good in a very subjective or highly volatile situation like bullets flying past your head. But I've often said your mind doesn't know the difference at first between losing money and getting killed. Sometimes you're going to panic as much. I live by my brother, and we go and smoke a cigar, not every night, but I got these short cigars, and I'll go and smoke it. We'll go outside, and I was out, walked by his house, didn't see him. He comes up behind me and scared the hell out of me. I said, what are you doing? He says, I was just walking behind you. I wasn't trying to scare you. I said, well, you did. You don't do that to a man. Now give me a light. But my point is I froze. I locked up. I'm not trained to, I says, you're lucky I didn't lay you out. He said, good luck. But anyhow, you got to know how to react diligently. And quoting, I think, is a skill that's at ground zero of being good at following a market. Today, I was going to get short on the way up. Oh, wait, where was it? I don't know what kept me out.
Here, I got something to add to that. That was a really good, point you made about being surprised by the market. Now, when I put trades on, I don't get surprised when it works out. When it goes my way and it's a winner, I expect that. Nothing surprises me when I got a winner on. A lot of times when the market moves really aggressively against me and I don't know what's going on, why it's such a loser or turning into such a bad market, I'm surprised. You know what I mean?
Yeah.
And that's why my plan of like, okay, where's my exit? Even though I don't know what's going on and it's beyond a recognizable loser, like, okay, it just moved a handle against me, I'm going to get out. Okay, well, geez, now it's 4 handles from where I got out from.
That shouldn't have happened.
Always a lose. That's always a surprise.
Yes, because that shouldn't have happened based on our expertise.
Based on my idea of why I put the trade on and why I'm in the market, it should not happen. And sure enough, okay, loser. I'm shocked. You know what I mean?
Yeah. Because think about it.
And that's why people spiral out of control or run into the full tilt because they have a loser. They either A, didn't get out when they should have, they added on, they put, they doubled their loss now, they're frozen, being frozen in the market, not being able to, puke your position. I mean, those are telltale signs that, you got to take a break, get out of your position, and, go for a smoke with Anthony.
Cigars, though. Cigars. Yeah, I don't smoke cigarettes. I smoke cigars. But I don't want to get into it, but I'll chew tobacco only when I'm outside on a baseball field, but nobody knows I'm doing it. So anyhow, and it's a bad habit. It's a disgust, and I don't do it. I don't get it. I'm lucky that, and I think it's what's kept me from adding the losers. It's one weakness that many traders have that I don't have. I know you don't have it. Most of us at DE never had it, and a couple of guys that did, they were more skilled at knowing that they were going to average and they weren't adding. But it's not being addicted to something. It's in my genes not to be addicted. Like if I could do this, I could stop doing it tomorrow or smoke a cigar and not have to smoke anymore. And I think it's part of what you have to recognize as your behavior. Don't get addicted to the suspense of a trade, right? Whether it's a good, I'm happy it's going up. What Wojo just said was really good, and that was when you have a winner, you shouldn't be excited because that's what you expected to happen, for crying out loud.
That's your job. That's your job.
It's your job, right.
Find positions that are, have a high risk-reward, ratio. I kind of said a long time ago to a group that, you shouldn't be excited to put trades on and this is awesome. This is your job. You should be excited about the lifestyle that this job provides you. Like at the end of the day, you're like, I can go out to a nice steak dinner because I did well today. But sitting in front of your computer having a great time, I mean, that's not the time for it. I mean, you should be studying, study chart patterns, study something, figure something out in the market. I mean, this is work.
And risk-reward, and because that was also well said, led me to think risk-reward isn't always, I'm looking to make 4 ticks on the winner, and I'm only going to risk 2 ticks. Oh, that's 2 to 1. And all I got to do is be right 38% of the time, and I'm going to be rich. I'm going to make money. Who can't be right 38% of the time? And you start working into those numbers. Risk-reward isn't always the numbers of how much you're going to make on the upside and how much you're going to lose on the downside. It could be the probability of that setup working. And the risk
that's
reward,
what it is.
Right.
The probability of that trade being a good idea.
The risk-reward could be +4 if it's a winner, -4 if it's a loser. Well, that's 1 to 1.
Right.
But the chance of, because this setup with the probability and your expertise that you built should work, and don't even worry about how much it should work. It just should work. And therefore, you could accumulate how consistent you are playing the right setups and not being surprised. And think of the backwards logic that what you said, I mean, it makes perfect sense in how so many people will get excited for winners. And if you weren't surprised by a loser, then why would you get in the trade, right? If you were like, I bought it at 81 quarter and I took a 4-tick loser, I knew that was going to happen. Well, then what the hell did you do it for? I knew this was going to happen. Well, but that's how you start to feel, and then it becomes you use the phrase spiral downwards, right? It becomes a snowball of negativity, and you become a self-fulfilling prophecy of a failure. And you start to do what? Your mind will start to prove you're right. You are a failure if you think about it enough, and your mind will sabotage you into proving you were right all along about being a loser. And it'll get you to add to that last final blowout trade. It'll get you just to avenge trade, just to say, I knew it. Well, yeah, you knew it because you totally broke pattern and away from any kind of looking for conditions and setups and discipline and everything you set out. And that's when skill turns to hope. And you're not going to make a living hoping a lot for a market to rally or break or do what you need it to do. It has to be skilled. It has to be understood and expected. Dudley come out, said something hawkish, you sold it, it went down. That's what should have happened. And you profit for it. It's your job to sit in front of the screen. You're not lucky for catching events. It's your job to do that. We weren't lucky to make money on just that complete for 9/11. I mean, do we feel bad about the money we made? Maybe a little bit, but it was our job to trade what was in front of us. We knew how to react, and you do it. And it's the same for any kind of event that could create bullishness or bearishness. And hey, what you never want to make money on something like that, meaning you don't want that to happen to make money. But when you get some sort of economic event like the Fed or a central bank or something that's a surprise with OPEC or something that really drives us up or down, and it's like you could take all your skill set that you tried to create to be a profiler and be an expert at whatever it was that you were trying to create for a strategy to trade, but that you don't know how to react to a big event like that where there was tens of thousands of dollars to make, throw your strategy out the window. The most and the best trades are the ones where you could catch something at the beginning of the event and have it go your way right away and run with it. Or find a leader and trade the lagger even though it's not the same leader every day or it's not that clean and helpful as A goes up by B. It's not that simple. However, you find something out of the corner of your eye that moves lower, you could sell it and say, hey, I was kind of bearish here anyways, and I'm waiting for something to tell me when to sell it. And then, boom, the biotechs broke 30 cents out of nowhere. You took a shot and went down. Hey, it worked. I'm not surprised it worked. It followed it. I was only going to risk a couple ticks on this anyways. That's a strategy. That's a setup. But you can't sell it and then hope the biotechs break, right? Because now you're trying to push on a big boulder. Let the boulder start rolling down the hill, take a shot, and then you react diligently to it. And that's how you kind of got to set up your setup. There's a have you looked at the Fed Fund futures since the Dudley was yapping earlier this morning at all, Woj, or have you looked at the Fed funds lately?
Not since he spoke. I mean, what did they move up by?
I didn't see it. That's why I was asking you. They probably...
Yeah, there was only... I'll be honest with you. There's still zero probability of them hiking in September. The guy's a complete idiot.
I did good on one of Dudley's comments. I recorded it. I got it somewhere. I got to show it. But it was a previous he sent about a few months ago. You don't think that's a smoke signal by the Fed?
Not at all. If they hiked rates, it'll be great for us. I hope they do. Jesus. There's only a 12% chance right now in pricing the Fed funds before Dudley spoke. I don't think he moved it that much. I
don't think they'll do it in SEP, but I think they're trying to signal one before the end of the year. Well, they got 3 meetings.
Have they ever hiked in close to a presidential election?
No,
and this much turmoil and stuff.
Yeah.
Brexit and all this stuff.
Well, that's what Tom mentioned earlier on. He says, "What are the election ramifications for a potential rate hike?" Well, one is they usually don't do anything to disturb Fed policy ahead of an election. And there's still so much uncertainty to start hiking. You got every other central bank easing, including England now. It was usually it was us and Bank of England were the two hawkish central banks until after Brexit. Then they became a dovish bank with the rest of them. We're going to be the only bank.
There's a pretty good article in Across the Curve. It's a free blog website, and they said how the LIBOR rates have gone up. Not the Fed funds, but the LIBOR, which Fed funds do price off of LIBOR and Eurodollars, but they're going up because of regulation and stuff like that. So the Fed essentially is getting an interest rate hike without doing anything.
In the overnight, LIBOR is the overnight mark, London overnight rate, correct?
Right. So that was a pretty good write-up if anybody cares about that.
What's the name of it?
Last day. It's on a website called Across the Curve. Just scroll through and find something about LIBOR. It's the latest one.
Do you go there daily to read articles? Or
yeah, he's a retired fund manager, so since he's retired, he doesn't do it every day or as often as he used to. But whenever he does post a an article or a write-up, he's pretty good. He's not like Zero Hedge, which is all just doom and gloom and complete warmongering.
They're sensationalized everything, and that's what
Yeah,
pretty much does.
It's
They're not a good resource or source.
no, and there's not many free resources out there that are free, that are worth reading.
That are good.
There's not. No.
No, I agree with you. And
I think
yet,
even the ones you pay for aren't that good.
right, and you don't know what you don't know, and so you kind of get hooked on, oh, this guy's this good or that guy is good, and they're just not. And what you just said, some of the ones you pay for, you don't even know what they're talking about, or they don't.
I just stick to the free ones, Financial Times, and I create my own, analysis. And
Who's the author that writes that blog? Do you know his name?
No.
Cross the Curve, though. Just Google that.
Yeah, just it'll pop up. It's pretty good.
Gary says one that's real good is Real Vision.
What is that?
Real Vision. One word.
Real Vision? Okay.
For fundamental stuff.
My buddy writes a blog. It's called Fixed Income, FIXED. Like they're fixing it.
Fixed income?
Yeah. I don't know how much he goes on there, but if he ever writes anything, I mean, the guy's got a PhD and he's pretty good.
Sometimes guys are really good writers, but what they're writing is BS. So
he's a trader too, so it's kind of like the best of both worlds, where the guy's,
he can articulate his
point.
point.
Analytical analysis, and he's a pretty good trader. So if he ever writes anything, it's definitely worth taking note of it.
Do you look at these time frames at all? Do you know that? Well, you don't have to look at it to know and assume that you've got multiple time frames that are bullish, right? Because you know the trend. That's kind of what the first 10 minutes of this meeting was me trying to explain where, if there's a trend and who's in charge. And when you're getting time frames mixed up, it gets to be even choppier. When you're getting them all to point up and they're at contract highs, it sucks because it's a drift. It's still not that great. But you want to get them where there's just movement, retracement. And if you're not getting that, you're going to have to slow your frequency. A guy's asking, how many spreads would you put on a day on average?
Like when it's slow right now, just a few, 3 or 4 spreads is all you really can force into a slow market like this.
And as you're trading outrights, would you put on maybe a trade a day? Maybe
yeah,
not?
I'm trying to be really, really nimble on where I'm going to get at, because spreads do take up a lot of my time. I go back and forth to doing other things around the office, and I come back just to kind of babysit the spread. And the time frames that I'm trading, or the way I'm trading outrights, you do have to wait for that setup to be there. It's not like I have to sit there and cherry pick every single little up and down move. It's alleviated a lot of pain for me.
Well, and that's the importance of putting yourself around people that could distract you. You got somewhere to go, someone to talk to, something to do. It helped Dave when markets were slower or maybe tougher. He wasn't trading them, right? He was managing the business, and he needed kind of to do that at some point. But remember the guy that committed suicide? You didn't know him.
I didn't know him. Did you?
I didn't know him. No, because I started same time you did. He was long gone by then. But part of the reason was he kind of bowed out of a good business model. He didn't agree with hiring people. So got bought out, went on his own, and he seen the success Dave was having. I think that it'd be a little nuts to do it anyways, but anyways, that's what made me think.
This business is not worth, making your life any more stressful than it has to be. And it's really important to find a balance of, managing this business, managing the losers, and having a good life. I mean, there's times where I go through a stretch where I'm in a rut and I just absolutely hate this business. And it takes me a long time to, get back into, okay, get in the game plan. This is a good job. Here, you're going to be able to figure it out. And just like everything else, it works out. But you new guys, even maybe some of your junior guys, need to realize how to balance that. Go goofy.
Well, it's like any successful business. You're making money, and then you often hear people say they've been doing it for a while. I can't stand this, or this sucks, or that sucks. And then if you do what you just said, take a step back and say, it is a pretty good job, and you become a little bit more objective about it, and you don't get caught up in the suspense or the real-time volatility of how you're feeling instead of how it actually is, right? And the skill set that you're creating.
I get knocked out of my game plan for some reason, and it's going to happen for the rest of my career. And I got to realize, I have to take a step back and figure out, what did I do wrong that got me out of my game plan, and why do I feel like this? It's not just one trade. It's not just one bad day. It's several bad days. It's several bad things that I'm doing wrong as a trader. My game plan has changed so much that, it's really taken effect on, my business and my, my mental health. So when you do that, I mean, it's you got to figure it out, or else you're going to be out of business.
Well, here, and the other thing is, you get so wrapped up into breaking your rules, you don't even realize it. You're not even trading a plan.
Don't even know you're screwing up.
Right. Right. And I had a guy say this, that, and the trades he was taking wasn't even part of any kind of plan.
Right.
They were all events trades, but yet the thought was his setups weren't working. I said, you're not trading your setups, though. And he came to the realization, you're right. He thought he was. He was blaming his setup, but he wasn't even trading his setup. And that's how crazy the mind gets you to think, and
exactly.
whips you around.
That's why my setups are so defined. It's I cannot put an outright position on unless this and this happens, and that's
it doesn't have to be complex.
It's like math. I mean, you can't dispute it. You know what I mean?
Right. It doesn't have to be complex. It just has to be.
No, it's as simple as it's so easy. I mean, I'll show any of you guys this. I just can't show you my screen. I mean,
well, we'll do that in the future. We'll talk one of Woj's setups. A setup, a go-to setup you like, and if you're trading while you're consistently.
Just pull up any market you want. Pull up a regular P&F run.
A 4?
3.
Oh, 3 throws a curveball at us. All right, let me change it.
See, that's why you guys aren't making money, and I am. I'm on the 3.
These guys, some are, some might not be, but
this isn't taking anything away from your market delta. Add that into it,
No, exactly. And here's the thing about not making money. Some of these guys are, some are not, but I guarantee you all weren't before they came to understanding this business this way.
Doing whatever you're doing, all this can do is help you make more.
There you go. All right, so you got me to go to the 3 P&F, right?
Yeah.
You're seeing it?
Yeah.
See my screen? This is a 3 P&F. Strain 81s. You want me to go to a candlestick?
Can you do the one where it's just an X's and O's? You know what? That's fine. This looks good. Sit right there.
I think I can. Do I have to? No. I'd rather not screw with it.
Yeah, just leave it as it is, right here.
I bet you a thin spot lines up with what your X's and O's are going to do, but go ahead.
Right. See, 11:30. See, what I'm seeing is a lot of, support around, was that 78.5 the last day or so. I'm sorry, 87. What is this? Yeah, 78 in the orders. 78.5. I mean, I'm a buyer down there every friggin' time. And one thing that you told me was, you might need to have something that lines up for you to get you to buy it, but you're afraid to get run over on the opposite side. Well, if there weren't so many, support prices that get touched there, I mean, there must be 400 or 500 times that price trades. I mean, eventually you got to say I got to, stick with.
Well, especially in this period of lack of volatility, it's not breaking out. So don't be a breakout trader. Almost do the opposite. Play support on the fourth time. It's not breaking out.
Going on. You've been in a consolidative sideways trend since the 5th, and you have extremely low volume, and it's a summer market. You're not going to get the breakouts that you're used to that you're going to get in October. You got to trade differently right now.
And here,
you're not going to get breakouts. Come October, I guarantee you things are going to be a lot different on your charts.
Well, here's where the breakout happened on this PNF, on this 3, was right in here. If you're looking at this is where it scooted out and got bullish. So where does it come back and retest and hold as support then? Where it got bullish. This was kind of a stop run in here. For everybody who was selling it early this morning before 10 a.m., they all jumped on board to cover their shorts. Those that missed it are trying to buy it on the first retest. So it's it's the recent area where the market first got strong. Because what happens when the market first runs up? Most people don't catch it, right? That's one of the reasons why it runs. You probably got a lot of stuck shorts, and you got people not getting long, and it rallies from here, 78 to 81. That's a pretty good move. And then to 82. That's a real good move. And where does it come and rest? Kind of what we call it, where the stop started. And rests on there. 1,000,000 times. But this same trade isn't what you would do in October, probably, right?
Well, you're not going to get the consolidated sideways movement. You're going to get your new support levels are going to look completely different than this.
You're not going to have this. You're either going to have it come back into here and rotate out quicker, or come back in here and have it resume its break. You're not going to go this way.
Yeah, volume and lack of volatility is keeping these prices contained. I mean, so you as a trader have to say, we're not going to get the big breakouts. I can't buy highs and I can't sell lows thinking we're going to punch through, old support or old resistance.
No.
That was a big problem for me when I was an outright guy, coming from what used to happen all the time was when we would go to a new high in the Boon, which is the German 10-year. Every time we went through an old high, it would sweep up 4 or 5 ticks. So what did everybody do? They bought 2 or 3 ticks in front of the old high, and he made 10 ticks every time. And that stopped happening a few years later. And guys around me, it took me a few times to realize this isn't a working strategy anymore. But I had a guy I sat next to that still bought highs, 18, 20 months later. Oh my God, and he's complaining every day. He buys a high and it backs off the high, and I'm like, how do you not, change your strategy? Just when I didn't come up with this analogy, but somebody once told me, he goes, you're doing the same stupid thing every day or every other day. You're coming in here with your write-ups and your what you did during the day. And it's like, what if you got punched in the face like that? How many times would you get punched in the face before you learn how to duck? Well, probably once.
Yeah, that was. I didn't say that, but I heard a variation of that from this guy, Mike, before I left the floor. He says it's like you walk through a door. And you get punched in the face. You walk through the door. You get punched in the face. How many times are you going to keep walking through that door? I
think it's more painful to lose money than to take the black eye.
Yeah, you're going to find a different door. You got to, it's just how many times are you going to do that? But yet the mind will
Says
keep
this
you walking through the door. That's what people don't get in this when they get into this business, is that it's opposite of what you would think would work, or your mind is just your enemy. If you just let your mind put you on a leash, you're dead. If you're going to be one guy told me this, but I'm a really tough critic on myself. I says, I don't care. You still suck at trading. I go, so what good is that? Maybe you're too tough, or maybe you just don't know that you're not tough. I don't know, and I don't care. You're not on a couch, and I'm not a psychiatrist. But what I can tell you is what you're doing isn't working because you're not making money. I don't even care what you're doing. I don't even care. But you're not accountable if you're only accountable from yourself. If you're the only guy holding yourself accountable, you're not accountable. You're just not. You're going to tend to work out less. You're going to tend to do other things a lot less without accountability. What the hell is this? This goes down in here. So Woj is not unlike all the guys that come up through the ranks. It's simplicity. It's consistency on that simplicity. It's understanding, like one question that come in here, Woj, and I think our answers are the same, and that is, what do you do to get out of a slump? To me, is I stop trading as much. I mean, literally, slow the hell down.
Well, the first thing is to recognize that you're in a slump, and that's the hardest part. It might take you another week or two, and then you realize like how much money you've lost and how much stress you're under, and you put yourself, maybe your family through, and that's the hardest part. And there's absolutely nothing I have absolutely no advice except, get your game plan in check. And at the end of the day, if you realize you lost money, if you did everything according to your game plan, then don't change anything. If you realize that, okay, I'm going to be a very patient trader and I'm going to wait for these things, maybe it's only two things to line up before you can buy it, and that's fine. But if those things are consistent, that's all you need. Maybe it's one thing that shows you consistent. But what you'll see is, was I on my game plan? And if you're not taking the time at the end of the day to go through your trades and to look at, the market delta and see, were these good areas that I participated in? And if your answer is no, then you gotta figure out for yourself how to get back on course. And I think that's slowing down. It's taking time. Maybe take the day off, the next day off, and you're going to have to be extremely focused on your next entry levels, your next couple of entries, because that'll get you back on track.
Another way to quickly recognize you're not trading well, first thing will be if you drill down into kind of rating some of your winners, and like, man, I don't have a lot of effortless winners here. All my winners are ball busters and everything else. But also, and that could kind of sometimes foretell a slump not only coming, but, a big down day. The other thing is you got to have someone who understands your trading almost as well as you, that you review with constantly. That could be that accountability factor that could help you find out you're not trading well ASAP and say, no, you're not doing that. You're supposed to be doing that, but you're not. Oh, yeah. So define what you're looking for. If it's a head fake pattern, if it's a long up down bar, if it's a delta divergence, if it's a thin spot, if it's buying the low at consolidation, selling the high at consolidation after you identify consolidation, and looking for someone stuck in the footprint. Run through what your step one is. We did a couple meetings, Woj, a few months ago. Is what's your step one? What makes you sit up in the chair and pick up your gun? You didn't shoot it yet, but what makes you sit up in your chair and pick up your gun and get ready, then aim, then fire, right? And that's your progression of the things you need to line up. As he's saying, are you doing those things, or are you taking a trade with only two of your three things? And you got away with it for a week. And now the next week you're not getting away with it, but ultimately you're not following your plan. So I think what you just said was pretty profound. It's realizing ASAP, sooner rather than later, that you're trading like crap. Be honest with it. Sometimes you're trading like crap and you're really not losing that much money, but you're just getting lucky and you're just destined to have that big down day. And you're setting yourself up for a beating. A couple other things, we'll wrap it up. Could you recommend any books, someone's saying, or websites for someone to learn about spreading as a methodology? Do you know offhand any books you'd recommend for someone that was interested in learning more about spreading? No, wait. You there? Oh, he said he'd be right back in 2 minutes. Clayton, I'll ask him that question in a second when he gets back. Probably a spelling book. Every spreader I know doesn't know how to spell. Woj, are you back?
Yeah, I'm back.
Am I right? There's that one spreader, two guys that did presentations, and they had slides up, and they had misspelled words through the slides.
That's pretty accurate.
Yeah. So first thing you're going to learn about spreading is a spelling book. Do you, someone asked, do you have any books you would recommend for someone who want to learn more about spelling? Or not spelling, spreading? And spelling?
You know what? I haven't read too many books lately on trading, but there was one that gave it wasn't like Market Wizards where the guy was doing an interview or an interview, but this psychiatrist did do interviews with some pretty decent hedge fund managers, and I want to say the name of it was Trade Your Way to Financial Freedom. It was a really good book I read a long time ago. And I think the first 5 or 6 chapters were real good. The rest of them kind of,
was a repeat of the first few chapters.
Huh?
That's how a lot of books are. The first few chapters are good, and the rest is just a repeat of the first few chapters to make it 4.
Yeah, so that was really good. It talked about, like, what created success in their careers. Like, what did they do? What did they do well? And you know what? I'm not smart enough to figure this out on my own. So I listened to a lot of people, and I just kind of duplicated what they did, just like what these books are created for. Anthony and I didn't invent the wheel for trading by any stretch, but what we did do was work really hard and listen to a lot of people, and then took the strategies that fit our profile and refined those. I mean, it's not like I'm doing something differently with this market profile or P&F runs and stuff like that, or spreading. I mean, spreading's been around for a very, very long time. I didn't invent the knob spread, I'll tell you that.
You're just finding how you fit your own nuances to the conditions you like.
Right.
But
So find books that, do 2 things. Pick apart someone else's brain about what their model works, and then another book. Other good books are psychology books. What do you do when you have a loser? Do you open a 12-pack up? Do you go get a box of ice cream? You punt the dog to the tree? I mean, what are things that make you that take you out of your game plan, and how do you get back into it as fast as you can? So those are the 2 styles of books that I recommend finding for yourself. Let me look real quick online. There was a guy over at King Street who was a really good psychiatrist, and they hired him as a coach. So you guys can go look that up.
That's Steenbarger.
Yeah, that dude's awesome.
Yeah.
Read any book that you can find online. There's a lot of stuff that's free from this guy. He was really good.
Well, you know why he was good?
Out.
You know why he was better than the one we had? Is because Brett actually traded. Whereas you were still around for Dr. Mike, weren't you, when he'd come in and I mean, he was all right, but he didn't understand completely what we were going through, whereas Steenbarger does.
Yeah, he didn't. I didn't get much help off of the one.
Nobody did.
Our trading.
But you see the difference between him and Steenbarger? Is Steenbarger is actually, I think, would put stuff on.
Right.
Steenbarger, he's a big proponent of market delta.
And just take for what he says, at face value, and read through some of his stuff, some of his write-ups, and don't think that this guy's the holy grail, because he's not. Otherwise, he would be, still in business trading, and he's not. So I don't want to discourage anyone from not reading it, but there's a lot of good stuff out there that I think about even today. And this is over 10 years ago this guy was in business.
Well, he actually, knowing more about him than you might, he's still in business, but has done some stuff with private firms, so he's been less public with what he's been able to write or blog about.
Right.
So he's still in it. He's just not in it as he used to be. That's why he left there and went with someone else. So, but as far as psychiatry goes, he would be also my top recommended read and things like that. But I always tell people, now people in this program are much more well-versed than most people get into trading. I wouldn't start brand new people that are into trading to psychology first. I'd help them learn to find out what makes markets move, right? Know the right stuff, then work on your mind. A lot of people work on their mind first, and that's not going to make you money no matter how calm you are. You got to know what makes markets tick. You got to have the ability to do it, execute it, then understand the marriage between the mind and markets. But being, you read all the psychiatry books you want, they ain't going to make you money. You can read all the books you want. And one thing I think you were alluding to is not any one book's going to, be the holy grail or the end all. This works. You're going to have to twist and massage a little bit of you into any strategy. And that's what
right. That's why I like books that give, interviews of several different traders, whether it be, bank managers or hedge fund portfolio managers, you name it, guys that are day traders. The best idea is to find one where it gives a lot of examples of where their success came from.
Yeah, and you'll find some common denominators to
Right.
what you're trying to do. You'll be, let's see, there was a delta divergence as you were talking, but if you were waiting for another condition like a stuck short, so the price came off since we've been talking quite a bit, about 4 points. The delta was much weaker, which means there was a lot more selling than price was reacting to at first. So the delta went through before price went through these swing lows. However, there was nothing in the filter here. I got to revert my chart back. There we go. There was nothing in the filter here to get you to get stuck and maybe buy it. And it was a condition that prevented you from buying this knife that's floated lower. We're just banging around between. They make it up to there? No. I gotta read. Well, that's it. That's a nice long session, and I think it was good banter back and forth. Hopefully you guys liked it. Some people are thanking you for your time, Woj, so thanks again for jumping in. I'd like to do one in a few weeks, though, of you going over P&F as a point and figure guy. I don't look at them as X's and O's, and that's what true point and figure is. I'd like to do one where you could share your screens. And
Yeah,
show
I'll
us.
do that. I'll get that set up for next time.
All right, man. Thanks again. Appreciate it.
Okay, cool. Good luck, guys.
This I recorded, so I'm going to end it now.